Okay, good afternoon, everyone. Thank you so much for taking the time, especially on a middle of a Thursday afternoon here, towards the end of a week. So I first want to say, as agents, as IMOs, agencies, right, carriers, we have to constantly pivot, shift. We have to keep our eye on the ball and try to figure out, where the consumer's attention is, right? What does the consumer behavior look like? Study the patterns, right? And then meet these consumers and prospects where they want to be met. And, long story short, you have a lot of the younger generation, okay, even middle aged, right? Looking online, researching, trying to figure out, what is this life insurance and indexed universal life and long-term care and living benefits and annuities, and everybody's online now, right? They know the carriers, they know the products, they know the lingo even, okay? And yes, they still need to be educated, right? Because they're just reading these blogs and articles and posts. And someone, right, a financial professional needs to come in, right, share the story and sell them a product, protect their family. So you, as the advisor, right, need to know enough to be dangerous. And this day and age, right, when you hear from annuity agents or life agents or long-term care agents, oh, I'm going to focus on my niche, and then if an annuity comes across my desk, I'm going to refer out the business. Or, the life guy or girl saying, well, I'm going to focus on my term life and final expense, and if a long-term care quote comes across my iPhone or iPad, I'm going to send that business elsewhere. And there's no need to do that in 2024, okay? Number one, with technology, how simple and fast and easy as it is. Number two, more important, with us at your fingertips, as your back office, right? We have all the experts, the carriers, the direct contracts, the latest technology, sales platforms, everything that you need in your back pocket, right, to literally do everything for you except speak to your client, okay? And then that's your duty, and that's why you get paid, and especially with long-term care, there's a huge renewal, okay, that can be looked at as an annuity, right, if you have enough of these policies on the books. So the point of today's presentation, and I know I got a little ahead of myself, and I wanted to make sure you're paying attention and to get you excited, because I'm excited, but the point of today's call is to talk about a hot topic, a hot standalone product, right, that we all thought, if you've been in this business, for at least, 15, 20 years, maybe even 10 years, right, we all remember long-term care. There were agencies, there were agents that focused just on these standalone products, right? Remember Genworth, right? How can we forget? And we used to sell a boatload of it, okay, meaning our 20,000 agents in the country. And we all know what happened, right? We know what happened to standalone long-term care. We know what happened to Genworth. It was sold off, I believe, to a Chinese company, whatever it was, but they're not around anymore selling long-term care. So to be in 2024, right, and to have all of these great products and tools, right, at your disposal, okay, you're still missing something. You still have this little gap, and it's standalone long-term care. And the reason why we wanted to have this call today with Lawrence, who's a LTC expert, in my opinion, he's our VP at NGL. And the reason why we wanted to do this was to bring LTC back to the surface. And I know we've spoken about the LTC and life hybrids and annuity with LTC hybrids, and they're all great, of course, okay? And some of them accomplish the same thing, okay? But they are expensive, and there's still a need for a standalone long-term care policy. And I don't want to steal any of Lawrence's thunder because he's got some great stuff to talk about, okay? But my point is there's a gap in the space, and we're going to cover it today, and you all need to pay attention, okay? Get appointed if you're not already set up with Levinson, and start marketing and selling this product, this carrier, A-rated, okay? Lots of bells and whistles he's going to share, but it makes for a no-brainer, okay? And everyone, and we all know this, you can talk about the need for life insurance until you're blue in the face, and when you bring it up, especially if you're ever on a airplane or on a public bus or whatever, right? The person sitting next to you says, what do you do? And you say, you're a life insurance agent. You know, do you have life insurance? Usually they look the other direction, right? It's almost like you're a used car salesperson. I hate to say it, but it's the truth. Okay. But when you bring up, oh yeah, I focus on long-term care planning and advising, and all of a sudden, wait, long-term care? Oh, this is something, you know, I really wanted to look into. I heard it was expensive. Can you tell me more? It's a different conversation that opens doors to then speak about these other products, right? So we all know how important it is, and we all know what the sizzle is about here today. We all know how big the opportunity is, because I'm going to share on my next slide. Okay, but I'm super excited about this call, as you heard me say 4 times. So we also have some great stuff going on here at Levinson I'm going to talk about as we shift gears. We're going to have a giveaway at the end, so make sure you're paying attention to everything myself and Lawrence is going over. Okay, write down notes. Use that Q&A box, questions, comments. We want to hear from you, good, bad, or indifferent, because we build these trainings around you. So please pay attention, okay? And this will be well worth it. And again, you'll have nuggets to walk away with this afternoon to hopefully make more sales, open new doors, and protect your clients, their families, and then supplement your own income while doing so. Let's move forward. If we can go into the first slide here. We have a lot going on here at Levinson. There's a lot going on in the industry right now, as I mentioned earlier. When it comes to long-term care, okay, we talk about how large the opportunity is, right? We speak about the gap, and you as the advisor, as the professional, know enough to be dangerous, okay? But take a look at these statistics in front of you, okay? And look at the cost of what living benefits, okay, would cost a consumer, right? Or if they didn't have insurance, look at the dollar amount on the left-hand side. There's 4 boxes there, okay? Cost of nursing home care, home health aid, assisted living, adult daycare. It's unbelievable. This could wipe out retirement income for a couple, for a family, for a single individual, whatever it is, okay? You are coming in to protect that, okay, with an insurance policy called long-term care. So the opportunity is unbelievable. And by the way, when we're talking about this, you should also be thinking about your existing book of business, especially if you're a health agency, health agent, right? Maybe P&C, maybe you focused on senior market sales, you know, maybe final expense and health insurance. Now you can go back. You have a new story to tell. Okay, so again, the gap is huge, and you're going to cover it by learning about today's concept and strategies. Let's keep going forward. Okay, most important to us is you. You are our customer, right? We don't sell on a retail level whatsoever, 100% wholesale distribution since 1972. We don't have a call center in the back room like a lot of agencies do these days, which, by the way, should be illegal in my opinion, because how can you all fish in the same bucket? Right? There's a bucket of consumers, and you should be focused on that bucket, not the IMO or you're depending on for service. That's a conflict of interest. So anyway, you are our customer, our agent, and these comments, testimonials, reviews mean the world to us from our Facebook page, from our Google reviews page. I'm going to share top right corner. RJ was great. He sent me the links I needed for CE and explained some important info about the scholarship program. Very polite, promptly emailed everything to me, Agent Joseph. That means everything to us. That's what keeps us going when we're sitting here during the week till 7, 8, 9 p.m. sometimes, okay? We work long hours. We have a huge team now in 4 different states across the U.S., and these things keep us going early in the morning, late at night, whatever it is. So please jump in and share, and I'll share with the team and on our Facebook page as well. Chandra, bottom left corner, I want to express my heartfelt gratitude to each of you for your tireless efforts in making this work. Your support has been invaluable, and I'm truly grateful for it. In life, we must accept the challenges along with the success. That's the world, okay, again. So please, when you have time, and by the way, it's not that we're 100% perfect all the time, but my promise to you all, and I say this on record, is we're 99.9% perfect, okay? And for that one circumstance that maybe the carrier didn't give you an approval you wanted, or maybe someone didn't call you back in a timely manner, call me or Carrie, or just send me or Carrie an email. We'll jump in as owners, as a family, and we'll make it right, or we'll try to make it right. That's the promise, okay? But I don't think that's going to happen. Most of the time, you're going to be very impressed with the staff and the service that you get from everyone that makes up the Levinson family, Levinson team. Let's keep going forward. Okay, we now have text messaging available. So if you're not with your laptop, your iPad, your desktop 24/7, okay, which we are not, we have our cell phones, opt in for text messaging. So you'll get an email by the time we finish today, about 8 p.m. tonight. You'll have an email in your inbox with all of the material, the contracting to get started with NGL and Levinson, and then you'll also see a link to opt in for our text messaging. This is brand new, and again, it's just going to make your world, your life a lot easier when it comes to insurance and annuity sales. Let's keep moving forward. What I want to talk about next is also very important. We spoke about knowing enough to be dangerous, okay? And this touches on exactly that. Why? Because we have over 90 life, annuity, long-term care, living benefit carriers, supplemental product carriers, thousands of products, right? How do you know what's hot, what's not, what's discontinued, right? What maybe a company doesn't advance anymore. Maybe a company was sold out last week. How do you know? So when your client brings it up, you know how to answer them correctly, right? Because you never want to be the guy or girl that gives wrong information or doesn't know, and then they call the next agent, and that agent happens to have paid attention to our 411 leader, right? Or it's like a newspaper. Think of years ago, right? They give the correct answer. You just lost the client forever. So again, know enough to be dangerous. Every other week, you're going to see our 411 in your inbox sitting there. Make sure you pay attention because it's everything to do with Levinson and our carriers in one shot. Literally like a picture you click on and everything is in front of you. Okay? We make it very simple for you to keep your finger on the pulse 24/7. The next slide here real fast is about our LTC and hybrid companies, products, everything that you need to know. Now, here's what's important, and I spoke about this earlier. Again, top row there, you're going to see traditional long-term care standalone carriers, okay? Notice top left is NGL, and then you're going to see Mutual of Omaha. When you hear the NGL story, I think you'll understand why we decided to feature Lawrence and NGL on today's presentation, okay? Because the bells and whistles and the story that you're about to hear. And I'm telling you, in this space, no one comes close, okay? Now, if we're talking about life with LTC, obviously we have some great options as well. And then on the bottom section, annuities with LTC, same thing goes. And what I will say too, we don't have a Burger King and McDonald's on the same corner, if you will. Okay, each one of these carriers has their niche that they specialize in. Okay, so when you're out there in the field and you call Josh Hoffman in our office and say, hey, I got a guy, got a girl, I need the best quote, best product you have, you know you can take that to the bank. There's not going to be a better solution out there. Okay, period. You can feel comfortable telling your client that. Okay, if you got it from a Levinson marketer. Let's keep moving forward. All right, what I want to do next is shift gears. I want to jump into our featured presentation, and I have the LTC Pro himself, Mr. Lawrence Vivenzio, is speaking. And sit back, relax, take notes, and then we'll pick up where he leaves off, and then we'll wrap up with the question of the day. Lawrence, are you there, buddy?
Bill, I appreciate it, sir. How you doing?
Doing great. Thank you for joining.
Hey, thanks for taking the time to have us on today. And man, what a great introduction. And I'll tell you what, based on your introduction, I kind of shifted gears here. And for everyone on the line, it's kind of funny because I remember I asked Bill and I said, hey, what do you want me to talk about? You want me to talk about product? You want me to talk about having the conversation, the recipe for the sale? And Bill's response was great. He said, Lawrence, do all of the above. So, hey, everybody, I've got about a half hour, and I'm going to try and give you the Cliff Notes version of all of the above, let you know where I see producers having success in the marketplace in initiating the conversation, with how they have the conversation, and then where NGL fits into that conversation, what our niches are, and where we shine best. And Bill, you had a great line earlier. You said, hey, at Levison, we can do everything except have the conversation with your client and speak to your client. I want to give you guys some tidbits on how to speak to the client. If you're not constantly doing long-term care every day, some of these pointers are going to be great in helping you transition conversations from other products. And then we'll give you the NGL story, where we fit, and how you can, make us the solution that works for their situation. To give you a little background on me, Bill teed me up very well. I position myself as a long-term care lifer. It's all I've ever done. I've sold it. I've run BGA ops. I've been on carrier side of things now for about 7 years. I've been on every sales end of this thing you can imagine, whether it be individual, work site, you name it. So I wanted to begin by giving you some pointers on the conversation. And Bill, if you have anything you want to interject with or tell me to go in a different direction, feel free. If any of you on the line have heard me speak before, I always like this to be an interactive conversation. So feel free to chime in, even if there's questions in the panel you want to put into the conversation. I'm good with that as well.
Okay, great.
So, yeah, absolutely, man. So let's start with beginning the conversation. Where do you start? How do you transition things? And I like to always start with just a casual conversation point, right? People don't know how to really bring this up, whether it be with a friend or a family member or whatever that might be. How do you start the conversation? So even if it's just a regular conversation, you're steering it in a certain direction. You're bringing it up for a reason. So ask people about their family, right? How's the family? Is there construction in the area, right? And if you ask, how's the family, you're starting at a point where, they're probably going to bring up one of two things. Bill, what do you think one of those two things are?
Sorry, just had it on mute. As far as long-term care, living benefits?
No, just when you ask somebody and you're meeting a friend or a neighbor down the road, you ask, hey, how's the family? They're going to bring up one of two things. And, the prompt there, usually they're going to talk about either their parents or their kids, right?
Absolutely.
And that right there is your transition to a conversation about LTC planning, right? When you ask, how's the family? And they bring up the parents or the kids, that's your transition, right? Who's taking care of whom? What has come up in the past, right? Ask what their story is, and you'll learn more about that story, and you can steer it towards an LTC conversation. Construction in the area. In our community here, we've got a handful of assisted living facilities that literally look like country clubs. So, hey, have you seen that place they're building? They're building another country club or a golf course? No, that's going to be an assisted living facility. Transition the conversation that way, right? Are you getting together with your parents or your in-laws for whatever the upcoming holiday is, right? We had one just yesterday, and the 4th is coming up in just a couple of weeks. So your key point here is you're steering the conversation to talk about settings in which there's caregiving situations or settings in which they're going to take care of somebody else, right? So what's the holiday coming up? Where can you take that conversation? And, where are you going with it, right? Because they know, but they don't know. And by the way, talking about holidays, a little tip for you, the number one day in the industry, and I got this from the carrier with the largest block of claims in the industry, for newly filed claims is the Monday after Thanksgiving. Why? Because families are getting together. Families are having these conversations, and they're realizing, hey, somebody has something going on where they, are noticing, hey, Uncle Joe or Aunt Jane or Mom or Dad, something's a little different from the last time we got together, whether it be the Thanksgiving prior or whatever it might be. So you're steering the conversation in a certain direction. So that's the first one, casual conversation. I'm going to get product specific now on your transition points. So your Medicare to long-term care conversation, where do you start and where do you go? I always helped Medicare producers, and I did it in a lot of ways where I wasn't successful, and then I found a lot of ways where I was successful. So the Medicare to LTC conversation is a really interesting one. And I was just up, I travel a lot. I was in Connecticut recently, and I was talking to a producer, and I said, hey, how do you bring it up? And when do you bring it up? And she says, well, after I'm done with the Medicare sale, I ask if they have a need for long-term care planning. And I'm sitting there going, okay, I have things we can learn from. Everyone has a need for a long-term care plan, right? We know that. It's a matter of when she was bringing it up. So I asked those who are focusing on Medicare to position themselves as not as Medicare experts, but experts in helping you plan for healthcare in your retirement, right? That's what you are as a Medicare expert. But if you're not focusing on the long-term care part as well, you're leaving a huge part of the healthcare retirement planning aspect off the table. So don't ask them what you do. Tell them what you do, right? Don't ask them if they have a need for long-term care planning. Tell them what you do. I'm an expert in helping you plan for healthcare in your retirement, and to do that, we need to talk about two major items, right? And the other piece of this that I like is if you're a Med Advantage producer and you're in the premium savings marketplace, right? I just brought your premium, $200 a month for your MedSup, brought you to zero on a Med Advantage plan. You can transition those dollars into a long-term care plan. And one of the illustrations, I got to get somebody to make this for me. I like to picture is a rowboat floating on the water. And in the front half of the boat, you got a bunch of small holes drilled in it, right, that are letting a little bit of water in. That's what your Medicare plan's doing. It's filling all the small holes in Medicare. But in the back of the boat, you got a 3-inch wide gaping hole just letting buckets of water in at a time. That's the long-term care risk. And no Medicare product covers that, right? We have to talk about both. If you want the boat to float on the water, I'm an expert in helping you plan for healthcare in your retirement. I'm an expert in keeping this boat on the water floating. We have to talk about both of these items. So I want to give you these transition points because Bill was talking a lot about the conversation and where to go with it. I think these are simple points that people can relate to where you don't have to be a product expert yet. You can initiate the conversation, gain the interest, and go from there. Life insurance. You're talking about life insurance. What are you planning for? Well, I'm selling life insurance. No, that's the vehicle that gets them there. What are you planning for? Mostly the financial and emotional consequences caused by your death. Not so much physical with a death, right? Financial and emotional. Well, what if something happens and you're still around? You're still alive. You're planning for the same consequences. What are the financial, emotional, and consequences that are going to happen to your family? And now the physical consequences too, if they're providing that care. So can you think of anyone who's going through this with their family, right? What is the story? What are the consequences? So the key points in that conversation is, hey, the two events are equally as impactful. You're planning for the same consequences, just the trigger is different. You didn't buy life insurance because you think you're going to die in the next 10 years. But if you did, what would be the consequences? You don't buy long-term care insurance because you think you're going to need help with bathing, dressing, or getting around the house in the next 10 years. But if you did, what would be the consequences, right? So make these connections, right? You're planning for the same consequences, just different triggers. And I had a mentor in this industry who was phenomenal. And she said, hey, you have your life insurance to do exactly what you know it to do, but your long-term care insurance, that's your lifestyle insurance. Because it's going to protect the lifestyle of not only you, but everybody around you. So you need life insurance, but you also need lifestyle insurance because this is one of the top reasons why people outlive their retirement savings. And then people are willing to talk to you and further the conversation. The annuity transition. I like this one too. What are you doing? Well, I'm selling annuities. Yeah, but that's the vehicle that gets you there. What are you doing? You're planning for income in their retirement. What does that ultimately result in? Lifestyle, retirement lifestyle, right? To give them money to pay their bills, to give them their fun money, maybe a little bit to save, right? Lifestyle. Well, what if something happens that can completely derail this plan? What if something happens where everything we budgeted this retirement income for has to go somewhere else? What if you have a new bill that's $15,000, $20,000 a month in the future? What's going to happen? Well, the plan we created is completely derailed. And on top of it, this event's also going to affect the emotional and physical consequences of everybody around you, all your loved ones. Right? So again, this is lifestyle insurance, and the two must go together. If we're creating retirement income, we have to protect that retirement income at the same time. Right? The next transition is if you're a money manager. I don't know how many of you are, but this is another good piece of the conversation, right? And I like to correlate things because when people are focused on accumulation, right, they forget about protection, and the two have to go together. These are both the hands involved in the financial planning conversation, right? And I talk about the market correction risk versus the risk of needing care because advisors, as well as consumers, very well understand, hey, if there's a market correction risk, and if me as the advisor, if I knew about when it was going to happen and I thought it was going to be a pretty grave risk, call it 20%, right? That's a pretty major market correction. I'm going to pick up the phone, I'm going to call my clients, and we're going to create plans to get you out of this, right? We're going to create plans to mitigate this risk. What about the risk of needing care? Think about this. If you have $1 million net worth, there's a 20% market correction. You're down to $800,000. If one person in a couple needed care, that could be a $500,000-$600,000 risk in today's numbers if they needed care for 3 to 4 years. That's greater than a significant market correction. So if we're not protecting what we're accumulating, we're not doing both hands of the financial planning conversation. We have to do the full job and protect as well as accumulate. And I like that market correction risk story because it makes it a little bit more relatable for not only advisors, but also the consumers they're talking to understand, hey, this can be a major issue. And there is a tax-free cash flow planning tool called long-term care insurance that can help you overcome these risks. If you're a DI producer, you're doing IDI or group DI, remind them what it does, right? What does DI do? Well, if you become disabled, it replaces your income. Why? To protect your lifestyle so you can pay your bills, protect your family, and have your fun money. Well, what if you have a new bill that in today's numbers is about $5,000 to $7,000 a month? How are you going to pay for that? Right? One is income replacement. One is additional income, additional tax-free cash flow in the event that you need help with simple things like baking, dressing, or getting around the house, right? So those are just your openers. And I focus so much time on those openers because I truly believe they're the biggest piece of the conversation. Now, where do you go from there once they say, okay, I understand the risk, we need to talk? I have a buddy of mine in this industry. I 100% stole this from him, and it's an acronym called CHART. And if you follow this recipe, it really builds in how you get to the point of transfer and completing an application. We're going to start briefly with context, and I'm hopeful I can get through this with the Cliff Notes version fast enough where I can show you NGL and our product and what we do well. But when you start with context, you need to understand where your client's coming from. What are their perceptions? Write down their answers. Take notes. And when you accurately identify what their context is on the situation in the beginning, you're either going to see a clear path for a sale, discover what's preventing them from making a decision, or you know they're just not ready, right? And you'll know where to go from this. So start by asking questions. Probe. Why are we talking today? What's your interest in planning for this? Or if they don't have one, you can weave in different conversation points from the prior slides, right? When you hear the words long-term care, what images do you see? Have you had any personal experience or know someone who's needing long-term care? And then do the probing things. Tell me more about that. Tell me what you mean by that. Make them talk and write these things down. And once they've almost sold themselves, so based on everything we've discussed so far, what's your plan if your health changes? What's your plan if something happens? But the second bullet on the slide is where we're going to focus some of our time, because this is the biggest hurdle you need to overcome. When you hear the words long-term care, what images do you see? Do you think of these people? Do you think of the guy that said yippee-ki-yay, right? Do you think of the Michael J. Fox or Pat Summitt or Superman? You're not thinking of these people. Do you think of all these other singers or rock stars or news anchors or other people that we all know, politicians, astronauts, etc., right? These things happen. So here's where we got to go from myth to reality. The myth is this is nursing home insurance for old folks. The reality is that this is anybody at any time kind of help. Life happens. From unexpected diagnoses to accidents to injuries to stuff at the gym, car wrecks. I travel a lot. Stuff happens. How are we going to know what's going to happen when? And I like the stat in the middle of the slide. This is from the carrier that has the largest block of claims in the industry. Let's look at this. This debunks the myth that this is nursing home insurance. 91% of claims in their 5-year block they did this study on started outside of a nursing home. 91. Reality is if you plan to live a long, healthy life, chances are you might need some help with some simple daily living activities at some point. Right? So where do you go from there? Define what's what. What is long-term care? That's where I always start. Tell me what long-term care is. They might tell me when or where. They wouldn't be able to tell me what it is. It's when you need help or you have a cognitive impairment. Anybody at any time kind of help, whether it be age, accident, illness, diagnosis, you name it. Now, what is long-term insurance? Right? Well, this is the tax-free cash flow planning tool that can provide you with the funds you need for that extended care event. And it's a comprehensive policy that will cover care in the home, in an assisted living, nursing facility, adult daycare, you name it. So you're setting the appropriate context, right? Cost of care. Well, what does this kind of stuff cost? What's the need? Quite frankly, I think Genworth still has one of the best cost of care calculators in the industry. You saw me just type it in, genworth.com/cost of care. It'll redirect you to this. You can pick your state. You can go wherever you need to be. Knowing where Bill is, I'm going to pick Florida and just do a Florida state average, and you scroll down. You've got numbers. You could see home care is about $30 an hour. Depending on the part of Florida, that might be 35 or 40. Average assisted living is about $5,000 a month. You want the country club? You're probably talking $600 or $6,500. We just went through the stats. I don't focus much on the cost of a nursing home because most people aren't going to end up there. If you can create a plan that gets them a nice country club assisted living and 6 to 8 home care hours a day, you're doing your client justice. But this helps them realize I don't have $7,000 a month extra, and even with my plans, I won't have an extra $7,000 a month. And if that cost triples in the next 20 years, like it did in the last 20, what are we going to do? I don't have an extra $20,000 a month. There's a need. There's an issue. You've set the context. You've identified it, and you have to let them know this is not covered very long by your Medicare. It's not covered at all by health insurance. Most of them have 100% exclusion for custodial care. And your MedSup, MedAdvantage, that'll get you to the most about 100 days. People aren't worried about 3 months worth of care. They're worried about 3 years worth of care. Why don't these things pay for it? Because these things were designed to pay for skilled care, stuff you'd need a provider for. You're not going to show up at the emergency room to put your shirt on in the morning. If you do, they might think you have a cognitive impairment. That's a whole different story. What does pay for it? Well, Medicaid. But you have to virtually impoverish yourself to qualify. And the unfortunate story is many people do, and they qualify for Medicaid anyway because they've gone through everything they spent a lifetime saving. Medicaid's what covers it. This is why we need to help people plan, folks. So there's a high probability of this happening, and you could have a tremendous exposure. And remember, the reality, if you plan to live a long, healthy life, chances are at some point you'll need help with simple daily living activities like bathing, dressing, or getting around the house. Your age is health. I'm not going to focus a ton of time on this because I still want to get some product in here. So I'm going to buzz through the rest of the chart. I focus on context because the C in chart is the most important part. Full disclosure is key. There's a million questions you can ask. Get people's medications. From there, you have ideas of what's important, what avenues to go down, and what to do. Get their prescription meds, and you'll know what to do from there. Okay. If you know they take metformin, Google it real quick. Dr. Google's helpful. What's metformin for? Diabetic medication. Go down that rabbit hole. Do you have diabetic complications? Have you had circulatory or cardiac history? Right? Is your A1C score under control? Meaning, 7.5 or so or less. What's the rest of their story? And you can pre-qualify with us. I could spend an entire session just on pre-qualification, underwriting, and health. So we're going to go through that pretty quick. The A is awareness. When you get to this phase of the sale, you need to see what their awareness is at this point. If they have had direct exposure, if they've been a caregiver, if it's happened in their family, you got a way to a sale. If they don't, go back to the notes you took in the C, in context, and you'll see what you can do to create a story and a conversation there. Okay. But at this point, you're debunking the pushbacks. What's their awareness at this point? Do they have misconceptions? Because at this point, if there's still misconceptions that you haven't addressed, it's going to lead to them saying, I got to think about it, or thank you, let me get back to you. And the most common ones we're going to go through, this isn't going to happen to me. And the response here sounds counterintuitive, but I would urge you to agree with them. You know what, Joe? You're right. This isn't going to happen to you. But if it did, what are the consequences? This goes back to that life insurance conversation we had. I don't think you're going to die in the next 10 years, but if you did, what are the consequences? That's why you have that plan. Same thing for your long-term care insurance. What would the consequences be to your family, financially, emotionally, and physically, if you don't have a plan for this? Or take a different angle. It's not going to happen to me. Well, let's talk about that. What made it like? Because you initiated a conversation. You mentioned that your parents or your friends or your neighbor's parents or whoever needed this kind of help. And odds are, more of us than not are going to need this kind of help, especially when you're talking about a couple. Odds of one of the two of you needing this kind of help are astronomically high. So what makes you feel that way? Get their response and go from there. Address those misconceptions. They have to be addressed. Otherwise, we're not going to get to the point of application. I'm too young for this. Well, why would you say that? People would always ask me, hey, what's the right age to plan for long-term care? And I hate salesy non-answers, but this one deserves one. Because when you're healthy enough to get it, that's the right age. The other piece of that is when it's affordable to you. If you're healthy enough to get it today and it's affordable to you today, that's when you should plan for long-term care. I'm too young for this never made sense. We're never going to be younger than we are today. I'm never going to be younger than I was a second ago when I just said that statement. And generally, most of us are less healthy as we age, right? When you're healthy enough to get this and it's affordable to you and it's never going to get cheaper the longer you wait, that's when you should plan for long-term care. Get their perspective. Interesting. Why'd you say that? And then come back with what we just discussed, right? Other misconceptions. We're going to self-fund. We're going to pay for this on our own. Well, what if I could help you self-fund better and longer than you do it on your own? That phrase is a power phrase. I have seen that win over so many clients because they're intrigued and you're helping them achieve their goals. How can you do it better and longer than me? Right? So where do we go? Well, you have to talk about the cost of care in their area and how long they could pay for that. We hit that already. But let's look at a real life example, right? So I'm going to show you briefly our quick quote calculator. You can run a quote on this thing in about 15 seconds. Most people don't believe me, so I'm just going to show you. I'm going to put in an age nearest 55-year-old couple, right? And I'm going to run a simple plan, $150 daily benefit, 3 years, 3% compound with our shared third pool. I'll talk more about that in a minute, but ultimately they're paying about $4,800 a year. They bought about $500,000 in LTC benefits. By the time they're 85, that's going to grow to be about $1.2 million, right? That's a great story. Now, let's look at what they could do. And this is exactly what I would do with my own clients. I would Google the words compound interest calculator. And I always pulled up this one by MoneyChimp. Why? When I was still selling, it was the first result on Google. It's moved down a couple ticks. What was the premium in that plan? $47.83. So, Mr. Client, you told me you want to self-fund and you're going to invest to pay for your long-term care risk. Well, if you took your $47.83 and you added another $47.83 every year, and we gave it 30 years to grow, just like your plan, and let's say you got an advisor that's going to make you 5% on your money. We all know that's not going to happen, right? But play devil's advocate. and you compound it at the end of each year, just like you would with the long-term care plan. You made about 340 grand before investment fees, then maybe what, 30% of that goes to taxes? So what do you really have? About 200, 220, arguably, somewhere in there, right? What did the plan have? 1.2 million in tax-free cash flow. So Mr. Client, you can try to invest a plan for long-term care, but it's going to take significantly more than what you would pay in your premium to offset the same amount of risk. So that's when you go into resources, right? When you looked at our presentation here, you notice the R was underlined. We're already in resources as you were in the awareness phase. And then you get to transfer, which is where you have your closing statements, and you get to the point of trying to create a plan and design a plan with them and get to an application, right? The point here is, look, an unplanned event for long-term care can completely derail what you've spent a lifetime trying to achieve and have serious consequences, emotionally, financially, and physically, to your family. Are you comfortable with that being a risk on the table? Or can we get you a tax-free cash flow planning tool to remove this risk from your family's future and your portfolio, right? So how do we do it? NGL has a tremendous product. I'm going to shift to my product conversation here. We have some key areas where we should absolutely be on the table. And one of those is when you're talking to a couple. We do extremely well for couples, okay? And I'm talking, if we're not an option on the table for couples, we're leaving something off the table that should probably be there. And it's because of how we built the product. When you have Mr. and Mrs. Client, you don't sell them separate policies with separate premiums. With us, you have a joint policy that has a joint premium. And if one of them's perfectly healthy, the other one's on claim, that whole joint premium is waived, okay? Now, within that joint policy, those blue circles represent separate pools of money. He's got his and she's got hers. So if you sold call it a 3-year benefit pool, each of those blue circles represents a 3-year benefit pool. And at $200 a day, those are each $219,000 blue circles. Now, if you sell or shared, they will never do a lateral. They'll never touch each other, but you've got a separate third pool of money. Now, that's a third, in the example of 3 years at $200 a day, a third $219,000 pool. Now remember, they'll never touch each other, but if Mr. Insured goes through all of his benefits, he could then tap into that shared third pool. Or he couldn't if he doesn't need it, or if he needed all of it, he could use all of it. But if he needs about 80% and he passes, that could be a scenario. Now, Mrs. Insured, here's the beauty of this. He didn't chew up all her benefits. She's got her full pool left. So if a couple years later, she then goes on claim, uses all her benefits, she could then also tap into that third pool and use what was left. The way we structured this for couples, it has tremendous flexibility for the end user. Now, on this next slide, focus on the bottom. Look at these silver bubbles. We're offering an extra $225,000 in benefits here, just because the difference in policy structure. This isn't anything fancy either. This is $200 a day, 3 years, 3% compound, shared, most common rate class. And we happen to be about $1,200 a year cheaper in this example for a 55-year-old couple. If you're talking to a couple about long-term care planning, we absolutely should be an option on the table. I'm nearing about 45 past the hour, so I'll be brief on some other key product features. Bill, we could do another session on product features. I could focus on this for 45 minutes by itself. But I want you all to know we have a lifetime unlimited benefit period on a traditional product, okay? We have a single premium payment option on a traditional product. We have a 10-year premium payment option on a traditional product. Our single and our 10-pay are fully guaranteed from day one. There's no potential for a rate increase. The only exception to that on the 10-pay is in California, where you could during the 10 years, but once you're paid up, you're paid up. Now, our lifetime pay, I think we've got a great story there as to who we are as a company and what our position is in the marketplace. And when this comes up, I like to tell our corporate story a little bit and the industry story. So who are we? Well, NGL is a mutual company that's been around for 115 years with an A rating and great financials, about $5 billion in assets. We jumped into LTC for the first time in 2016. Think about industry history for a minute. Long-term care really only gained popularity, arguably mid to late 80s, early 90s. As an industry, the product was in its infancy. We didn't really know what the claims data was going to tell us for about 20 years. That's a time horizon, 20, 30 years on an LTC product. And that happened in about 2010 when we realized, hey, our actuaries in the industry might have guessed some things a little bit wrong. Now we know. Now there's enough experience from enough carriers to say, here's where we need to price this stuff. Here's how we need to put this stuff out to market. So come 2016, NGL entering the marketplace, we don't have a 20-year-old business that had some bad assumptions. We're not worried about it. We've got a great product with current assumptions, current pricing, current underwriting practices, right? So I think our lifetime premium payment option, we've still got a good story there too, that the products of yesteryear didn't have, right? So I hope this was a helpful session in helping you bring up the conversation, have the conversation to get yourself to the point of a sale, and to see some of the highlights of where we fit in the marketplace. We could have follow-up sessions solely on underwriting, solely on product, more on the conversation. You tell me what you need. But at this point, I feel like I've had you all drink from a fire hose in about a half hour. Know that NGL's here. We have best-in-class service. We want you to be part of the Levinson family and the NGL family. We want to do all we can to earn the business. So please don't hesitate to reach out to Bill and his team for anything at all. And it's our pleasure to help any way that we can. Thank you all for your time. I really appreciate it.
Great job, Lawrence. As always, we appreciate it. And let me just say, too, if you have a few agents in your agency or in your downline and you want to set up a private one-on-one training with us and with Lawrence, we can absolutely arrange that for you, no problem. As long as you're appointed, you're active, just let me know, and we'll get you on a schedule. So that would be great. Okay, Lawrence, thank you again. I have a few other things I'm going to wrap up with, some sales ideas, some example posts, and then we'll have our question of the day as we do every single week. So if we can, there we go, perfect. Okay, how to get started. So let me get my notes here, take a sip of water, give me 1 second. And by the way, don't forget, Apple AirPods at the end, the IUL prospecting book, if you answer the question correctly and you're first. So you got to sit tight for about 10 more minutes here, and then we'll have our giveaway. Okay, here we go. So real fast, how to get started. You're going to see this in our thank you email, and just follow those yellow arrows. And here's what's so neat. So, excuse me. Had a little tickle there, I apologize. If you are appointed today and you're under another IMO, so we will match or beat your existing commissions, and you get leads for contracting or cash for contracting with your first paid app. Okay, so take advantage of these incentives, and this is on our website and again in our thank you email. Okay, so you'll see it tonight, or just ask any one of our marketers. Let's keep moving forward. What I want to do too is, and for all of you that, let's say, are focused on annuities or life, and you want to supplement your income and offer long-term care, great. If you want to do the same exact thing in the annuity space, I just want to mention something real quick. So it's Annuity Awareness Month in June, and we had a sit-down live meeting yesterday with Charles. He is our annuity sales professional consultant. The guy is amazing. So he's famous for that 60-second napkin close. So we had him in the office in front of about 9 agents, and we recorded the entire training, which we're going to launch out this week. And then we sat down and did a podcast with him, Kerry, the owner, my father, and myself. Okay, so both partners and Charles live for an hour having the annuity conversation, getting the doors open. Okay, so you're going to see both of those links or videos or episodes launch this week. And we arranged, and this is off topic for a second, but if you're interested, let us know. We arranged a private workshop training, okay, for annuity sales. And what we're going to do, we're going to run this for 8 weeks consecutively. Okay, 8 weeks. We're going to do 30 to 40-minute sessions. We're going to start the first week of August. Okay, we're going to run it through the entire month of August and September, and you have to commit to 30 to 45 minutes once a week, okay, for the 8-week period. It costs you nothing, and by the time you're done, okay, you're going to be an annuity sales pro. I can promise you that. His trainings are great. They're interactive. You do need to be appointed with us, and you have to have a Zoom. It's going to be on a Zoom platform with a camera engaged. So you have to make sure you do have access, or you purchase one on Amazon. But if you're interested in the workshop, let me know. We're going to limit it to like 25 agents for the first pilot. But I'm super excited about that. And if you want to know more, let any one of our marketers know. We'll get you up and running. Okay, let's keep moving forward. This is our LTC hybrid section on the website. Everything you need to know at your fingertips when it comes to standalone and hybrids in the annuity space and the life space as well. So again, everything very simple, interactive, real time. Click and literally go, and you're off to the races. Okay, let's keep moving forward. What I want to do next is talk about another option for long-term care. So Manhattan Life has this home health care product, okay, very affordable. It is a great door opener. It's another good story to tell. It's a smaller benefit product, up to $450 per day. Now, here's what's so neat. Number one, it's just about guaranteed issue, okay, very simple, and it's 100% direct to consumer, meaning you can email a link, or you can have this on your social media. The client can run a quote. They can apply. They can get approved in less than 12 minutes. Or you can do this in front of your client with an iPad or your iPhone or your desktop. Okay, run the quote, explain the product, apply, boom, you're done. And comp is great, renewals are great, and there's not an easier way to sell long-term care. We're going to have this webinar on with our VP on the 18th at 2 p.m. So similar format is what we're doing today, but with our Manhattan Life VP, we're going to dive into the HHC product. That is awesome. Okay, it's another niche that no one else has. So I think that'll be another great nugget for you all. All right, let's keep moving forward. What I want to do next is talk about we spoke about, in fact, the 60-second annuity napkin presentation with Charles. That was our meeting yesterday. We're going to send out that recorded version this week. So this is a similar concept when it comes to long-term care napkin presentation. Very simple strategy. We'll include this in the thank you email, but very simple. Draw a stool, okay? As you can see, center page. And then there's 3 legs: lifetime income, long-term care, wealth transfer. And you could say, Mr. or Mrs. Customer, do you have all 3 legs attached? Oh, no, I don't have the long-term care leg. Let's talk more. Let me run a quote, show you the advantages, ask the question, where do you want to be at 70, 75, 80 years old? The 3 legs are the protection, stools. Are you done? Yes, no, sold the policy, or we move on. Very simple concept. We'll include that in the email, like I said earlier. You'll see it about 8 p.m. tonight. Let's keep moving forward. What I want to do next is talk about something brand new that we just added to our website. We have a bunch of, like I said, life, annuity, health, P&C agencies. They have huge books of business. Some are smaller. It really doesn't matter. You're always looking, right, to get the door open, share your story, cross-sell, bring up these other products, the needs, okay? If you're not letting your clients know that you handle all these lines of insurance, right, you're not doing them a service. It's in fact a disservice. So you're going to lose the client. You can potentially lose the policy that's active, all right? So you got to get the word out. And this is a complete library of turnkey email templates that touch on every type of product that we and you offer, okay? Why? So you can get the reply back saying, hey, Bill, I want a quote. I want to know more. These are already built for you. We can co-brand them and make sure that we get your picture, 800 number, email, website, and you're off to the races. So if you're interested, let us know. The next slide is we had a fire sale blast. This is important. So real fast, if you have any existing banner term policies, okay, you can now convert to Symetra permanent insurance. That's a big deal. Number two is American National. Okay, back, I would say about a year and a half, 2 years ago, we sold a ton of American National term policies. Okay, they have a great conversion product, the Signature GUL. Problem is, it's going away on August 1st. Okay, so you have about a month and a half to get the word out. Okay, and it makes for a new sale, a conversion opportunity. It's a win-win-win. But again, you have about 5 to 6 weeks left. So great fire sale conversation starter. Call it whatever you want. And then, of course, we have the new Anico products coming out as well. Okay, in fact, we had a webinar last week, and you'll see the replay version coming out by early next week. All right, sample social media posts. I want to make sure I get everybody out before 3 p.m. Eastern. So now you know enough to be dangerous, right? You heard from Lawrence. He's the LTC Pro. You know about all of our platforms, and you want to start marketing this tonight, okay, for free, okay? Why not get this out on your LinkedIn page, Facebook, Instagram, X, Twitter, right? Get it out to your friends, family, your network. Why not? If you get 5 messages and 22 likes, you reach out to everyone, right? Those are free leads, okay, that you just got. That costs you $0, okay? We know how this works. You can generate your own leads for free by educating, okay? So here's what we did. We pulled the 3 top performing posts when it comes to long-term care. Left-hand side, what are we doing here? Educating, right? We're talking to the consumer. The middle section, health insurance and Medicare typically won't pay for extended long-term care. We heard Larry talk about that today, okay? Opens doors, 173 likes, over 30 questions or comments came in from one post. On the right-hand side, if you develop a chronic illness or become disabled and can no longer care for yourself for an extended period of time, you'll likely need long-term care services. Questions arise. Guess what? You're there to run the quote, educate, and make a new sale, okay? And then talk about annuities, life insurance, IUL, take the conversation wherever you need to take it, but these are great door openers. So anyway, just a few examples of what's working today. You don't have to reinvent the wheel, just change a few spokes, I always like to say. All right, we got 2 minutes left, and we're going to have our question of the day. So the podcast we recorded yesterday, one of my all-time favorites. Why? Because it was me, my father, okay, Kerry, who you all know, and Charles, our annuity sales pro. It was one of the top episodes. I'm telling you, you're going to hear why I'm saying this tomorrow when we launch today, actually today or tomorrow when we launch it. But keep your eyes peeled for that. And I'm telling you, even if you never sold an annuity before, by the time you're done listening, you're not only are you going to be excited about bringing this up, but you're going to want to try some of these new methods. I'm telling you right now, it was amazing. I'm getting excited thinking about it. Right-hand side, I mentioned that Manhattan Life HHC product, the long-term care alternative. So we're going to have Todd and Kemp on, in fact, the president of Manhattan Life and our RVP on July, I believe, 12th. So make sure you're on that webinar. In fact, on the next slide, we'll show you exactly the dates here. If you want to jot them down, make sure you're on these upcoming trainings. So real fast, on the top section there, we bring in our top annuity consultant, Chris. And Chris is great because he's not tied to one company in the annuity space, and he gives us the lowdown, what's great, what's not in the annuity space industry-wide. That's at the end of this month, 27th. Then we have social media tips and tricks with Assurity on the 2nd of July. And then just under that, our Annuity 101. This is our training dashboard with a new certificate of completion. So you can become a Levinson annuity sales professional, add a new designation to your business card on 7/11. Manhattan Life, yes, it's on the 18th of July. And then on the bottom, we have National Western Life is back to talk about the new life and annuity products and strategies of 24. 7/25 is that date. My last slide here, and then we'll put a bow on this. First, I'll start with my Positive Tuesday quote, left-hand side, and then I'll ask my quick question. If you don't separate from distractions, Those same distractions will separate you from success. Stay in your lane, blinders on, right? Keep your eye on the ball. There's no shortcuts. Do things the right way. Everything comes to the surface, right? We know what it takes, but you got to put your right foot forward and put your action plan together. Words are cheap. Action is everything, okay? Try it. Get the word out. Share these stories you learned today. See what happens, okay? The results will speak for themselves, literally, okay? Question of the day. Make sure your little fingers are on the keyboard. You got to be quick and you got to be correct. So I mentioned the annuity workshop. We are starting 8 weeks, okay? 8 weeks, 30 to 45 minutes, once per week. Tell me the date we are starting the annuity workshop and you win. Okay, I mentioned there was a date that we're starting the annuity workshop. Okay, if you want to repeat exactly when I mentioned that it's starting, that's the answer for the webinar question of the day. It was the annuity workshop. We're going to run it for 8 weeks, 30 to 45 minutes, once per week. Interactive Zoom calls. When is it starting? You tell me when I said it's starting, and you win the Apple AirPods and the IUL prospecting book. Andrew's going to tell us who was first and correct.
Okay,
do we have a winner?
Is Kirk. Yep, it's Kirk M. Kirk M.
Kirk M. It was the first week of August. Kirk M. Congrats. Thank you to everyone. Okay, get the word out. Leverage our resources. We're here to help you. Okay, so please, we have a team of 24 now, and we'll do everything except speak to your client, like I said, like Lawrence said. Okay, it's your job to get the word out. Call one of our marketers. We'll get you up and running 100%. Have a great rest of the week, a great weekend, and great selling. Thank you again, everyone.